As Washington prepares for an important transition at the Federal Reserve, new information is drawing attention from investors and global markets. According to administration sources cited by Fox Business, President Donald Trump is expected to interview Rick Rieder, BlackRock's chief investment officer for global fixed income, as a potential candidate to become the next chair of the Federal Reserve. The interview is scheduled to take place at the White House and is expected to include several senior officials. Those reportedly present include the President, White House Chief of Staff Susie Wiles, Treasury Secretary Scott Bessent, and Deputy Chief of Staff Dan Scavino. This meeting would mark the fourth and final interview in the administration's process to identify a successor to current Fed Chair Jerome Powell. Jerome Powell's term as chair is set to end on May 15. Powell was originally nominated by President Trump in 2017 and confirmed the following year. During his tenure, he has overseen the central bank through a period of significant economic change, including global disruptions, inflation cycles, and interest rate adjustments. The selection of a new Fed chair is one of the most important economic decisions a president can make. The Federal Reserve plays a central role in managing inflation, POTS employment, and financial stability through its control of interest rates and monetary policy. Markets often react quickly to any signals about leadership changes at the central bank, as they can influence expectations about future policy direction. Rick Rieder is a well-known figure in global financial markets. As BlackRock's chief investment officer for global fixed income, he oversees investment strategies across bonds, credit markets, and interest rate products. BlackRock is one of the world's largest asset management firms, and its views on the economy and financial markets are closely watched by investors worldwide. Rieder's background in fixed income markets gives him deep experience with interest rates, government bonds, and financial conditions, areas that are directly influenced by Federal Reserve policy. Supporters of his potential nomination may see this experience as valuable at a time when markets are highly sensitive to inflation, debt levels, and global capital flows. At the same time, the prospect of selecting someone from the private financial sector to lead the Federal Reserve raises important questions about independence and governance. The Fed is designed to operate separately from political and corporate influence, with a mandate to make decisions based on economic data rather than short-term political considerations. Analysts note that whoever becomes the next chair will inherit a complex economic environment. Inflation pressures have eased compared to previous years, but price stability remains a priority. Economic growth has been steady but uneven across sectors, and global conditions continue to shift as trade, technology, and geopolitical trends evolve. Interest rates are also at a critical juncture. After a period of tightening, followed by several cuts, markets are trying to determine what the long-term path of rates will be. The next Fed chair will play a key role in shaping how quickly and how far monetary policy adjusts. The interview process itself reflects how seriously the administration is taking the transition, by holding multiple interviews with different candidates. Officials are signaling that they are evaluating a range of perspectives and experiences. The fact that this is reportedly the final interview suggests that a decision could be approaching. From a financial market perspective, even the possibility of leadership change can influence expectations. Bond yields, stock prices, and currency markets all react to signals about future Federal Reserve policy. Investors will be watching closely for any confirmation of who will be nominated and what their economic philosophy might be. It is also worth noting that Federal Reserve chairs do not act alone. They lead a committee that includes regional Fed presidents and other board members, all of whom contribute to policy decisions. While the chair plays a major role in setting the tone and guiding discussions, monetary policy is ultimately shaped through a collective process. As May approaches, attention will likely increase around this transition. Financial institutions, businesses, and households all depend on stable and predictable monetary policy. A smooth and well-communicated change in leadership can help maintain confidence, while uncertainty can introduce volatility. For now, the reported interview with Rick Rieder marks an important step in the process. Whether or not he is ultimately selected, the development highlights how closely financial markets and political leadership are intertwined. When it and Taurus comes to central banking, the coming weeks are expected to bring more clarity, as the administration moves closer to naming its choice for one of the most influential economic roles in the world.